What's up guys, welcome back to the channel. This is still me, Solomon Wisdom, and in today's lesson what we're going to cover is top-down analysis. Top-down analysis is one of the most important parts of any trading strategy you want to use to make money from the financial markets. When we talk about top-down analysis is simply analyzing price action or the price chart across different time frames. That is, we have to go in a descending order where we have to go from the higher time frame to a medium time frame and to a lower time frame. So this is what we're going to cover in today's lesson. What we're going to cover is firstly how we're going to understand price across different time frames, secondly how you're going to identify trading opportunities, and thirdly how you're going to find entries to points of interest or areas of interest which you're going to look to trade from. Okay, so this is what we basically going to cover in today's lesson. So if this is what you're actually interested in, kindly subscribe to the channel so you're going to be updated each time we release videos on this platform. Okay, so this is basically what we're going to do in today's lesson. So looking at the little sketch we have on the screen right now, if you're actually a smart money trader, the first thing we always going to identify is actually structure. I want to bring to your notice that there are actually different ways which we can actually do top-down analysis. That is, doing this top-down analysis in order to have daily bias and direction of where price is likely going to draw to. Now I'm going to show you this particular one. This is one of the ways I do it, and this actually pays well. Okay, now what we're going to do is firstly we're going to do this from a higher time frame. So basically I'm an intraday trader, so I use three basic time frames. Firstly I use a higher time frame, which I use the daily time frame as my higher time frame. So I'm going to type that out. We have the first time frame here, which is the daily time frame. And after the daily time frame, after doing my analysis, I usually drop to a medium time frame. So the medium time frame I usually look at the 4 hours or the 2 hours time frame. So for the past months I've actually stick to 2 hours time frame, so we're going to need the 2 hours time frame. So secondly we need the 2 hours time frame. And after my analysis on the 2 hours time frame, I usually drop to the 15 minutes time frame as my lower time frame to look for my entry confirmations. Okay, these are the three major time frames I use during my analysis and my top-down analysis. Okay, the daily time frame is to identify the market direction. The 2 hours time frame is to identify my point of interest and see how price is actually returning back to my zone. And thirdly, I'm dropping to the 15 minutes time frame to look for entry. But mind you, if I'm not actually looking for entry, I can actually enter off the 2 hours time frame zone. That's if I don't want to look for entry confirmation. So the third time frame right here on our list is what we call the 15 minutes time frame. Now these are the three major time frames we need. Now once you start your top-down analysis, what you're actually going to do is you're going to move to the higher time frame to look for the direction of the market, understanding the market order flow. But in case you may be a scalper and maybe you are actually a position trader, these time frames can actually vary. So if you're a scalper, you can actually use the 1 hour time frame as your higher time frame, okay, or you can actually use the 2 hours time frame as your higher time frame. Then you're going to need maybe either the 30 minutes time frame or the 15 minutes time frame as your medium time frame. Then you can actually drop to the 5 minutes or the 3 minute time frame for your entry. It actually depends. Okay, so I'm explaining this as an intraday trader. So looking from the sketch we have right here, what we see is we have a break of structure right here, and what you can clearly notice is that this particular low we have right here pushed price to the upside, and now we have this high being formed. When the high was formed, we have this retracement to the downside. A low was formed. When the low was formed, price reacted to the upside, breaking over the previous structure. And not only did it break above the previous structure, it also closed above this previous structure. Okay, I hope this is actually clear. Now one important thing I want you to notice when you're looking at this higher time frame is that when you drop to a medium time frame, the price action you're going to see on the price chart is actually going to look like something like this, where you're going to see where we have a trend inside this range. I hope you can clearly see that. You're going to see a movement like this inside this range. So this is going to signify that this leg of prices you see on the higher time frame, you see this one leg of price on the higher time frame, this is actually a trend on the lower time frame where we see price breaking structures. We have a shift and a push to the downside. This is actually very simple, and this is actually what I want you to notice. The major and the most important thing I want to make clear is how you can actually find trading opportunities from the higher time frame. Okay, how you can do that, analyzing from the higher time frame down to the lower time frame. Now in this case, when we see price takes this previous high and prints another high, now we have an expectation. What is our expectation? Our expectation is that we're going to expect a retracement back into this range, and when price returns back into this range, we're going to anticipate that price is going to react to the upside, because firstly what we're going to note is we're going to have a very good zone at this particular area. We're likely going to have maybe a range created demand zone, or we're going to have our order block right here. Okay, this is something that is very clear, but there are some criteria we need to see before we take a trade from a zone right here, and how price returns back to our zone actually matters. Now the most important thing right here, what we need the higher time frame is to identify the order flow of the markets. Now the most important thing we can actually see here is that we've identified that price is actually bullish, price is pushing to the upside, and we have a zone right here. Now what is the expectation? The expectation is that price is going to come back to mitigate this zone. This is what you've seen on the higher time frame. Now when you drop to the medium time frame, what you're going to anticipate is the reversal to the downside. When we see price reacting aggressively to the downside back into our zone, reacting with this kind of momentum, I think you should avoid this trade, because this looks more like a falling knife, and if you try to catch a falling knife, I guess you're going to get hurt. So if you see price returning aggressively back into your zone this way, I think you should actually avoid that. The best way you want to see price returning back to our zone is where we see price returning correctively, where price returns something like this back into our zone. Even if price doesn't return correctively, we want to see price give us price actions like this before it mitigates our zone. Then we look for entry to react to the upside. This is the kind of price action we want to see. But if you see price returning aggressively back into your zone, I guess you should actually avoid that, because it might actually turn out to be a wrong trade if you try to take those kind of setups. Now when you drop to the 2 hours time frame, that is the medium time frame, while looking at how price is turning back to your zone, what you're likely going to see is price, when it's printed this high, when the high was printed, we're going to see some kind of reversal. Now at this point, this is where you can actually take a reversal trade, because yes, we're actually waiting for price to return back to this zone. Another important thing you have to notice is that this zone is actually a higher time frame zone, and at some point it might take weeks or days, some might even take months before price could get to this zone. Now will you stand still, or will you wait still till price returns back to this zone? No, this is not what you're going to do. You're actually going to take advantage of some of the trading opportunities in the market, and in this case you need to see a very clear trade opportunity before you can actually look to take a trade. Now at this point, what you can clearly see is that over here we see price returns back into this range, and what you actually see is that we have a shift in market structure right here. Okay, this is actually a market structure shift, which a lot of people call a change of character. Okay, so this is a market structure shift. So when we got this market structure shift, what are you going to anticipate? You're going to anticipate that price is actually going to react from maybe a supply zone at this area. What is your expectation? Your expectation is that price is going to react to this zone and a push to the downside. Now why are we reacting, or why are we looking to trade from this particular zone? Now if you actually use your Fibonacci tool, this is our Fibonacci tool right here, and if you try to measure from the low to the high of this range, so this is the range we're actually looking at right now, and what you can see is that this is the low of the range and this is the highest high of the range. And now what is our expectation? Our expectation is that price is going to come back to this zone and we're going to trade, and since we got a shift in structure, we're going to look to trade from this zone to the downside. And this is why the Fibonacci tool is important in this case, because this Fibonacci tool is actually going to help you to identify your premium and discount areas in the market. And what you can clearly see is that this area right here is actually your premium level, and the low right here is your discount level. Now what do we do at the premium and discount level? We usually sell from the premium level. Okay, at the premium level we're looking to sell to the downside. Another thing is that we usually buy from the discount level. Now if price is at the discount level, you're going to look for buying opportunities to push to the upside. Okay, I actually have a lesson on the Fibonacci tool. Maybe if you can actually look for it, or I can try to link it in description so you can check it after now. Another important thing I need you to note is that once price is selling into the discount level, in this case since we are selling from the premium to the discount, once price retraced into this 0.5 level, I think you should start looking for a way to lock in your profit or exit your market, because from this discount level there is a possibility that price might actually react from the discount level to the upside without actually getting or mitigating our zone right here. Okay, this is actually what you're likely gonna see in the markets. Now at this point, when we got this shift in structure, what is your expectation? Your expectation is that price is going to react, mitigate our supply zone, and we're going to anticipate another continuation to the downside. Now we actually have another break of structure right here. Now we have a break of structure to the downside. What is your expectation? Your expectation is that we're going to have another mitigation back into this range and a continuation to the downside. Seeing price reacting this way, this actually shows that we are in a bearish order flow inside this range, because this is your trading range, this is your high, and this is your low. So don't get confused in what you're seeing. This is actually just a lower time frame, because this is actually your medium time frame. So this is your medium time frame price action, but looking at the overall price action on the higher time frame, you're going to see that you're actually bullish in this case. The only way we can actually have a shift in structure is if price closes below this range right here. Okay, I hope this is actually making sense. Now that price is reacting this way, this is actually what we want to see in the market, and from here we can actually see that we have another break of structure right here, and the expectation is that price will actually come to this area to mitigate. But in most cases, price might not actually get to that area. Price might actually just react till it gets to our zone. Now that price returns back into our zone, this is where we're going to look to get our entry confirmation. Okay, this is where we're going to look to get our entry. Now at this point, what are you going to do? This is, remember, you actually at your 2 hours time frame. This is actually your 2 hours time frame structure. But if you go to the higher time frame, what you're going to notice is that this is actually one leg of price. But looking at the 2 hours time frame, you're going to see that price was actually returning to your zone correctively. Now at this point, when you drop to the 15 minutes time frame, which is actually going to serve as your entry time frame, what are you going to look for? You're going to anticipate for a market structure shift. And what does a market structure shift looks like? Now let's say in this case, when price mitigates your zone, let's say this is actually your zone right here, and price comes back to mitigate your zone. This is where price taps into your zone. What is your expectation? Your expectation is that price is actually going to give you something like a market structure shift, just like we see at this particular area. So when you drop to the lower time frame and you see a market structure shift where price breaks above this particular high after trending back into this range. So when you see this market structure shift at this particular area, what you're going to do is you're going to actually mark your zone. So once you mark your zone, you're going to expect price to come back, mitigate our zone, and you're going to see a reaction to the upside, right? So this is what you want to see. You're going to anticipate that price is going to react from that zone and continue pushing to the upside. Okay, and in some other cases, you might actually get a double confirmation where price might actually come back and give us another entry, but we don't usually see double confirmation all times in the market. And another thing you have to note is that it's not every time that price is going to present this confirmation entry for you. Okay, so this is actually what you're going to look for when you drop to the lower time frame, where we're going to anticipate that price is actually going to give us a very good entry which you're going to look to trade from. So this is actually what you're going to look for when price returns back to your zone. So now that price is at our zone, what is going to be our expectation? Our expectation is that price is going to present a shift in structure. So what does it look like? At this point, we have this low, and what is our expectation? If price takes this particular high, because from what you can see, price has been breaking structures to the downside, which shows that we've been in downtrend. Now at this point, you see price mitigates our zone, and what you want to see is a shift in structure. Now from here, you see price breaks above this particular high, so this is your valid market structure shift, and what you're going to do is you're going to look to get your entry from this zone. Now if price actually comes back to mitigate your zone, you're going to look to trade to the upside, and this is actually a very simple strategy. Now another thing you have to put into consideration why price is reacting to the upside is actually these zones that are not mitigated. Okay, you see these zones, they were not actually mitigated. Now if price is reacting to the upside, just look out for them. Well, there is a possibility that price is actually going to react from some of these zones. Okay, this is actually very simple, and this is how you can actually do top down analysis, identifying your entry and also knowing where prices are likely going to move next. Okay, so let's see a live chart example, okay, so you can get a better and a clearer understanding of what we are explaining. So this is the price chart we're going to use for the practical example, so everyone is going to understand exactly what I'm explaining. Okay, now what you can clearly see from here is that this is AUD USD price chart, and we actually at the daily time frame, but I actually got a trade from here after my top down analysis. I and my team and some other people who follow me, we actually made money from this setup. So let me show you what it looks like before it's played out. So this is actually the setup, and this is our VIP channel, and this AUD USD before hours time frame, and this is actually what the setup looked like before it played out. And if you look from the left, you're going to notice we had a zone right here, and we actually got few reaction which made us money, and we got few profits before price reversed, and we actually took advantage of the reversal to the upside. Now we got an entry right here and we made money, and this is what I'm going to explain so you know and learn how to do it yourself. So from what you can clearly see from here, you can clearly see that AUD has been trending, and you can see we've seen some nice price action where price has been reacting with candles with big bodies. Okay, I hope you can clearly see that. Now from this particular area, if we try to look from here, we can see that we have this break of structure to the upside. You see price broke structure to the upside, reacted to the upside. After this high was formed, we have a push to the downside, which actually broke below this low. I hope you can see this was actually the low, and price closed below this low. Not just closing below this low, price pulled back a little, and after the pullback, we see price breaking below here once more. So price broke below this low, we had a pullback, and at this point we've seen a very nice shift in structure at this area, because this was actually the high that took this low and printed this lower low we see at this area. But at this point, we see a reversal to the upside where price takes the previous high, right? Price takes the previous high, reacted to the upside, and we see a retracement to the downside where price came back to mitigate this particular zone right here, because we can see this candle right here serves as an order block. This is actually on the daily time frame, right? Now price comes back, mitigates our order block, and we've seen that reaction to the upside. Now that price reacted to the upside, what is going to be our expectation? We're going to firstly identify this break of structure, and we're going to anticipate that price is going to react back into this range, because from what you can clearly see, this is actually our trading range. This particular high and this low is our trading range. So let me try to mark it. You see at this point, this high is our range, and this low we have right here is our range. So we are trading in between these two candles. Now if you look at these areas, what you're going to notice is that we have a very nice zone. So if you're looking to trade from a zone, you see this is actually a very nice zone if you want to look to trade from there. And just like I said, if you see price reacting aggressively back into this zone, we're going to look to disregard this zone. But if you see price returning correctively, this is actually what you want to see, and it's actually a very nice price action. So let's try to press price forward. So we started seeing this pullback, right? You started seeing price pulling back to the downside. Now what we're going to do is we're going to drop to the 2 hours time frame to see what we have right there. Okay, we're dropping. I said we're going to do it in a descending order, where we have to go from a higher time frame to a lower time frame. So what we're basically going to do in the 2 hours time frame is to identify how price is reacting back to our zone, and if there is need for zone refinement, we're going to refine our zone. And if we can actually get a trade during the retracement, because you can actually trade during the retracement, just that it's kind of risky, right? But we can actually trade the retracement back into this zone for mitigation. So let's drop to the 2 hours time frame. So this is the 2 hours time frame right here, and you can clearly see this is actually our zone. What you have to note is that this zone can be refined. A lot of people can actually refine this zone, but the truth is that when I actually marked this setup on the higher time frame, I didn't even look to refine this zone. Why? I didn't want to miss the trade, right? Because if you look to refine, a lot of people might actually look to refine to this particular order block right here, and if you refined to this order block, it was actually nice, and you're going to see a lot of people trying to refine to this particular one right here. Those who trade extreme zones, is actually a very nice one. So I'm not going to say your zones are not actually correct, so they're actually good zones. So at this point, we started seeing price reversing to the downside. Now as a smart trader, what you're going to do is you're going to look for how you can actually get your entry, because from what you can see, price is still at the premium level. Before price could now think to get to the discount level, you must have gotten few trades set up that must have paid off. Okay, so price is still at the premium level, and what you're going to anticipate are trading opportunities which can actually make us money. Now if price takes this low, this is where you're going to see as a market structure shift, and we're going to look for entries, right? From what you can clearly see, price closed below this low, so this is a valid market structure shift. Now what we're basically going to do is we're actually going to look for entry at this particular area, because surely we're going to have a zone right here. But in this case, the price action we have right here is not too clean, because we've seen very large wicks. So looking for where to select your zone is actually going to be very hard at this particular point. Okay, it's actually going to be hard. But looking at this area, we've seen an inefficiency right here. Price left an inefficiency, so I think this is actually going to be the entry for those who trade inefficiencies. That's a fair value gap, those who trade from fair value gaps. But I who look to trade from my other blocks, there is no other block right here, because I'm seeing this week, and trying to include the whole of this week is actually going to be too large, and I don't think it's going to be favorable to my risk to reward ratio. So let's play price forward and see. And our price moves away, and you see price comes back, taps into the fair value gap, pushed back inside the range. If there was another block, I'm sure it was actually going to be mitigated, and now we'll see the reaction to the downside. So if you're actually looking to trade the reversal, that's a good trade and you're already making profits. And what you can see is we actually have another break of structure right here, price closing below this low. So what's your expectation? You're actually going to look for another supply zone to trade from, because in this case we've seen a liquidity sweep pattern where price builds liquidity, sweeps the liquidity, and reacts to the downside to break the previous structure. So it's also nice you look for a zone to trade from, but what you actually see here are very large zones. Okay, you see price is actually leaving candle wicks which are very large. Okay, so personally I don't look to trade wicks that are too long. Okay, I trade from wicks where I go to the lower time frame to refine the wick to get my order block, but in this case the wicks are too large, so I don't look to trade from the wick. But if the price action is very neat, this is actually how you're going to mark your zones and get your entries while you trade back into this range. So let's see if you can actually get an entry. Now you see price comes, taps into the zone, and now we've seen a reaction to the downside, price pushed back to the downside. Now we actually got two entries if you actually want to take a trade, the first entry and the second entry, and you actually see we're in profits. Now when price drops into the discount level, what you're actually going to do is you're going to look to start locking in your profit, because there's a possibility that price is actually going to react from the discount level to the upside without actually mitigating our zone. Right now playing price 4 to see, and now you see price comes, mitigate our zone, and you've seen a little reaction to the upside. So this is actually what we did on the 2 hours time frame. Okay, this is actually what we got, took 2 trades on the 2 hours time frame before price mitigate a higher time frame point of interest. That's the point of interest we actually marked from the daily time frame. And another thing I said you should keep in mind is you should be mindful of this kind of zones, because price can actually react from this zone. And this particular zone we have right here, these zones that we are not mitigated, it's actually possible that price might actually react from this kind of zones. Okay, because this one actually have inefficiencies. Now what you can actually do right now is to drop to a lower time frame to look for your entry, because this is actually what we're going to do. If you're not actually looking to use the aggressive entry method, what you're going to do is to drop to the lower time frame for entry. So let's drop to the 15-minute time frame to see if you can actually get a very nice entry. So this is the 15 minutes time frame, and this is actually where we're going to look for our entry. And remember what I said, we want to see a market structure shift, where I explained the price action we want to see, where price is actually going to shift in structure. And from what you can see from here, price has been trending to the downside, and at this point what you can clearly see is that price breaks structure to the downside. I hope you can see that where we have this break of structure to the downside, a pullback. These candles right here was served as the pullback, and we see another continuation to the downside where price breaks another structure to the downside. Now at this point what you can clearly see is this is where we got the market structure shift. So this is where we had the shift in structure, and what you're going to do is you're going to mark your zone, the candles that swept the low, as your market structure shift. So this is actually how you're going to mark your zone if you want to get involved, the whole of this candle that swept the low. But it's actually what we call zone refinement, where we look to minimize the size of our zone. So if you mark your zone this way, I don't think it's actually bad, making sure that this area was included, right? A very nice way to mark your zones if you really want to get an entry. And this is actually your zone right here. So if you want your lower time frame entry, this is the correct zone. And from what you can see, price already mitigated the first time after we had this break of structure. We had the first mitigation and we're getting the reaction to the upside. So if you are not actually satisfied with the mitigation, I think we actually got another mitigation before price starts moving away to the upside. Now what you clearly see is price builds liquidity, now come very close to our zone, react to the upside. So this is actually where it's going to serve as our inducement area, because a lot of people is actually going to look to enter from this zone, but this area is going to serve as an inducement. And what you can see is price comes back, sweeps this inducement area, closing below the inducement area. And if I try to extend this zone, you see this is where we got our mitigation. And now what we're seeing is we are now having a little reaction to the upside, right? Now I think we should drop to the maybe 2 hours time frame to see how price is going to react to this, since we've already gotten our lower time frame entry. So this is the 2 hours time frame, and what you see is we got the lower time frame entry. So all we have to do is to press price forward and see how price reacts. And you see how price reacts from our entry to the upside. And this was actually a very good trading setup, but the only difference here is that I didn't actually approach this trade with entry confirmation. I approached it with the aggressive entry method. Okay, that's what I actually did. Now just like I said, these areas right here can actually hold price, and from what you can see, price is actually reacting from this particular area. So this is actually a very good area that could hold price. So this is it about top-down analysis, how you can navigate across different time frames, seeing trading ideas and getting entries to make money in the financial market. And I hope this lesson was actually helpful. So if this lesson was helpful, kindly subscribe to the channel to get updates each time we drop lessons on this platform. Okay, and if you actually have interest in joining our mentorship program, we actually have a private community. You can actually check the description. The link to enroll for that mentorship is actually in the description, and we're gonna offer a lot during that mentorship. So look to enroll for our mentorship, and see you in the next lesson.